How likely is a recession in 2020? It's the question of the hour, and it's on everybody's mind. Hi, I'm Tara with 𝐸∫ Real Estate Team. Let's get started. Now, we need to remember that next year is a presidential election year, and probably one of the most controversial elections that we'll have yet. There's going to be a lot of questionings and a lot of political debates about the economy as a whole. Why is it good? And questioning if our economy is going to decline. So this can really stir up a lot of hype and a lot of emotion. Now, there have been 4 major surveys this year asking experts if they believe that we're going to see a recession. 67% do believe that we should see a recession by 2020. Pulse Economics surveyed analysts, and 59% believe that we will see a recession by 2020. Why do we think this? Well, we've been in the longest recovery in American history, so we really should expect to see a slowdown. The GDP will slow down, but let's look up the Webster's Dictionary definition of what a recession is. It's a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP, which is gross domestic product, in 2 successive quarters. But we need to remember that recession does not necessarily mean a housing crisis. And in fact, in 3 of the last 5 recessions, housing prices actually increased during the recession. Now, obviously, this wasn't the case in 2008, which was the most dramatic that we've had. But on the same survey from Pulseonomics that asked if experts anticipated a recession, they also asked that same day, at that same time, to the same analyst, what would trigger the recession? And the number 1 answer was trade policy. The number 2 was stock market conditions, and number 3 was geological crisis. Number 9 on the list of triggers from experts was a housing slowdown. In 2008, our largest decline in appreciation was because of a housing slowdown and the situation that was going on in the mortgage industry. This year, we're not even in the top 8. And also, that same survey, that same day that asked what about the median appreciation of housing prices, and all analysts agreed, housing prices are going to go up, not down. While appreciation is going to slow down, the prices are still going to go up everywhere from about 2.5% to 4.1% through 2023. And why is this important to know? Well, we really don't want to get into a panic about buying and selling and become afraid that our market will be like 2008 again. And in fact, Morgan Housel, a well-renowned financial analyst, said an interesting thing, and that's that the widespread assumption is that the next recession will be as bad as it was in 2008. He says it's natural to think that way, but statistically, it's very highly unlikely. It could be over before you even realized it began. That's what he thinks. Prices and appreciation are expected to just be more normalized. So please, don't let all the hype about a recession scare you from the dream and benefits of home ownership. In my opinion, it's one of the very best investments that you can make. And according to Mark Fleming, the first American's chief economic, he says, if the 30-year fixed rate mortgage declines just a fraction more, consumer house buying power would reach its highest level in almost 20 years. So what does this tell us? It tells us to be caught up with all the hype. Make the move, and as always, if you have any questions at all, please feel free to reach out to us. Tara Coyle with 𝐸∫ Real Estate Team, and as always, make it a great home buying and selling day.